Hey guys.
G'day, Noel. Good to be with you again.
Hey Dan, hey Revo, John. We just missed this trade here, which was just before our window. I am just going to go to the bathroom before the trading day starts so that I don't sit here wanting to do that. I'm back.
Good morning, Scott.
See you tomorrow, Naka. All right. Let me just let all these people in.
Hey, Scott. It's Julian.
Hey, Julian. How are you, man?
I'm good. The last email you sent out, it was okay for the first few lines, and then it became a bit unintelligible.
That's entirely possible because I'm an idiot most of the time.
Not at all. I was just letting you know this stuff happens.
Yeah, it's it happens to me at a pressing. Let me have a look at it. Yeah, I don't know. I'm not technical enough to solve those kind of things. Yeah. Oh, if I messed it up, I messed it up.
Say la vie.
Say la vie. How are you?
I'm really good. Thank you very much. I'm just looking at a demo platform for a broker and trying to get to grips with that, and it changes things. I had quite a slick process, but obviously to go back from paper trading to live trading, obviously you've got to introduce something else. So made my head spin yesterday, but that's all right. I get that.
Changing platforms can be really, really difficult. Yeah, just why I don't. I've tried MetaTrader a couple of times and I've found it really, really hard to trade with. Other people seem to love it.
It's funny what you get used to, isn't it?
Yeah. One of the things I want to point out with is look at this. This is just textbook, like from an extreme of high volatility to an extreme of low volatility. And if I make the 10-minute chart, no, that's the 2-minute chart. If I make the 10-minute chart bigger, you can see we just have an extreme low and then an uptick. I'd be very surprised if we didn't get a very strong directional move, direction unknown, today. And you can already see that. I'll just let a couple more people in. You can already see the character of the way that the ticks are happening is like there's a lot of fast moving happening here, and it sort of tells me that we've broken free of that unsustainable low volatility here, and it's going to be a big day. And if you look at the 2-minute chart for the last couple of hours, this is fucking disgusting. This is terrible. And it looks like we're going to be free of that. So let's see. We've got a lower Bollinger touch on 3 time frames. A hammer candle here would complete a setup, I think. But I don't think it's going to be a hammer candle. Kenneth has a cool question. Do dojis count as hammers and shooting stars? So our definition of a hammer is lower wick equal to or greater than 2 times the real body and a close in the upper half of the range. So a doji where the close is in the upper half of the range counts as a hammer. A doji where the close is in the lower half of the range counts as a shooting star. But exactly 50-50 does not count. And that's more of a big deal in especially ES futures, the E-mini futures, because E-mini works in quarter points. For a full point is $50 and quarter points are $12.50. So you get it's quite common to have an 8-tick range with a close exactly 50-50 or a 4-tick range with close exactly 50-50. So you get a lot more dojis in. It's comparatively rare to get a true doji in FX, but it's very, very common in futures, index futures anyway. Good question, Kenneth. Okay, so we have our setup is touch of the lower Bollinger, higher close, waiting on a lower close without breaking here. But the distance from the entry point to the stop loss, our 1.1R target, has to be below the highest high in 25 bars, which is here. So it's unlikely that that's going to happen. And we could set up in reverse. This 10-minute chart has not quite touched the Bollinger yet. So the Bollinger high is 598 and our actual high is 596. So we need to go up a little first. And
so it's not gonna be like, oh yeah, right there.
so our Bollinger high is 598 and the high is 599. So now we have Bollinger touch on 3 time frames, and now we're looking for a short as well as a long. So this situation where we have a bounce between 2 comparatively wide Bollingers is a pain in the ass, but this will resolve fairly quickly. It always does. The annoying part of it is we have the potential to get in a short trade and then get bounced back into a long trade. So that can happen.
I'm not talking.
So looking at this, to me, it appears like the long side probably has the edge here. It could go either way.
Yeah, you know what? Yeah, she has cut through. Yeah, and then we just knock off like.
All right, so now we have to kind of pay. Well, we don't really know. So we need a touch of the Bollinger, part 1. Part 2 is a lower close, and then we need a higher close. So here we have a touch of the lower Bollinger, higher close. Now we have a lower close. The target has to be below here, though, and that's not going to happen yet. So we're kind of in a holding pattern, and while we are, I'm just going to make sure my trading platform is all set up right. Hey, Sherry, welcome back home.
Hello, Scott.
How are you, sir?
I'm good, man. How are you?
Yeah, feeling really good about today's trading, actually.
Okay. Let's see.
Fingers crossed. Is there a reason why I have two from Ben, from Michael? Is there a reason why I have two indicators on the chart? No, I'm an idiot. I must load it twice. Thank you. And Ben, you want decreasing volatility for a trending trade and increasing for a counter trend trade. It's a little bit simpler than that, Ben. We only take trend following trades in a decreasing volatility situation. All other situations, we take counter trend trades. And the rationale behind that is that, sorry, I just have to check that, is that the markets, if we look at this market, it looks like the market has trended and trended and trended a long way, and it has, but it's really spent a comparatively short amount of time in this really strong trending phase. The vast majority of the time is spent when it's fucking around and fucking around here and fucking around in this bit and fucking around in this bit. So markets spend the vast majority of their time really fucking around. So any you want to, if you're going purely for trend following trades, you end up with really, really high drawdowns, which isn't necessarily a bad thing, but it's just a pain in the ass in reality, because, you know, we all want it. When markets start doing this, they tend to do this for quite a while. And so you can get into a situation where you take trade after trade that doesn't work. Okay, so we have a touch of the Bollinger, we have a lower close. A higher close here will complete the setup. So I need to prep an order just in case. And it's 2:10 and 28 seconds. So this is likely going to be a setup. So the entry point on this setup would be, you can see here, our low is 58.2. 582, you read it as 58.2. So as soon as it breaks this high, this setup is off the table. The high is 599. We've got an equal high. And now it's 600. So this setup is off the table. Once we break to new highs, it's all off the table and we start again. Kenneth, when decreasing volatility mode is on first, and then the 5 and the 10 minutes both start trending in the opposite direction, does that end DV mode? No, it does not. Good question. The rule is, once DV mode is on, it's on until it turns off. And two things turn it off. One is making the highest ATR value in the trend so far, and two is breaking a pivot too high in ATR. So if you're looking to interpret the rules, guys, the way to interpret the rules is with the most literal, basic interpretation that you can. So even if you think something should be this or should be that, just read the rules out loud and ask yourself, does it fit the literal objective version of the rules? And it's generally not down. We try and make it so that it's not down to my opinion or what I'd like. Just okay, I have to pay attention here, because if this is a shooting star in 2 minutes, this will be a setup. And it may not be a shooting star, but it may be. So what I do in this situation, and the way to stop myself getting fucked up, is just to prep an order just in case. And so so the high is 619 and the high is 619. So that would, okay, so now we have 620, which is a new high, so it can't be a setup. So I don't have to prep an order. But as a general rule, if you want to master this system, the way to do it very, very well is to prep a lot of orders that you're never going to actually enter. And it seems like a waste of time, but what it does is it means you never caught out, you never caught napping. Now, if we look at the bigger picture, what's this market done? It's tried to go down. It's reached an extreme of low volatility. It started clearly its upswing in volatility, and it's doing it after a whipsaw to the downside, and we're going up. This market's going up. It's on like Donkey Kong. This is a market that wants to go up. Counter trend trades are going to suck here. We're still going to take counter trend trades, but they're not going to be very good. From Nick, the stop loss range of that setup would have been 1.5 pips. Really good question. So the 1.5 pip trades are going to make it completely uneconomical on any broker, short of a prime broker to trade. So to make that a viable economic strategy, we have to size the trade as though it was a 3 pip stop. And then you still leave your stop at 1.5 pip target. So effectively, you're risking 1.5 pips to make 3.5. Okay, so now we have the highest close in the trend. Simon has a good question. Might we anticipate a good day today after yesterday's hammer horror? Yeah, yesterday did suck. To me, it looks like a good day is imminent, but I don't like to make those sort of like, I like this one, I hate this one kind of like, so I'm going to raise position sizing. To me, that's a recipe for disaster, because when you get it right, you feel really clever, and when you get it wrong, it just messes with your head. So here's another order that I have to place. It's 214 and 44 for me. So this bar will roll over in about 1 minute and 10 seconds. So the entry point here would be the nearest half pip below 61.9, which is 61.5, and the stop loss would be 63.5. So we'd be risking 2, sizing it for 3. So risking 2 for 3.5. Let me just prep my order. All right. This may be a setup or may not be a setup, and the entry point, no, that's not going to be a setup. And you can tell it's not going to be a setup because it has to be a shooting star to be a setup, and that's impossible with this configuration now. I said that, and look, and it's not impossible at all. In fact, it may happen. So the entry point would be 60. The stop loss would be 63.5. So that would be 3.5. Let me adjust my order. 3.5 for 4. So 60 less 4 is 56. That makes the target all the way down here, which is still okay. Yeah, I got to place that order. Okay. Okay, so that order should be placed at 60. All right. So sell short if we break the nearest half pip low here. So you can see this low is exactly 60.5. So the nearest half pip is a fair way below. It's down here. May not happen. May happen, may not happen. And you can see we have confirming evidence on the 5, confirming evidence on the 10. We keep an eye on the time. So with 28 seconds to go in the bar, kind of hoping this one doesn't fail, actually. This is kind of a shitty trade. Okay, now the bar has rolled over. Now our rule is once we have the shooting star, we only leave it on for the next bar if we can leave it at the same spot. So the low here is 60 and a half. The nearest half pip is 60. The low here is 60.4. The nearest half pip is the same. So we leave that on. We cancel this order if it breaks this high here. Until then, this goes from being a retest concept set up on this bar to a retest variation if this close is higher than this close on the close of the next bar. So let's just keep an eye on it. And the guys who haven't seen the system before, one of the things I want you to notice is keeping an eye on the time is critical. If there's one thing that's like pro level, it's knowing when the bars are rolling over. If you like wait until the last 5 seconds and try and figure it out, or wait until the bar rolls, sometime somewhere the market's going to move super fast and you're going to be behind the 8 ball and you're going to be rushing to place an order and you're going to make a mistake and it's going to mess with your head and then you're going to make 10 mistakes. That's the way it works. So the way to not make any mistakes is not make the first one. Like if I look at the days that I trade badly, I'll have days, if I have a day where I make one mistake, the odds are very strong that I make more than one mistake. If I have a day where I made 0 mistakes, the odds are pretty good that I'll make 0 mistakes again tomorrow. Okay, this setup is now off the table and I cancel this order, which is good. So the market told us something there. The market told us that it had a perfectly valid reason to go down and it didn't want to go down. You know, we have a very strong move outside the Bollinger Band. There should be sellers, there should be profit takers, and those profit takers were only able to push it down to here, which isn't very far, and then the buyers took over. Especially given that we're at the relatively start of our volatility thing, we can expect volatility to reach somewhere up here later on today. So we've got a really nice up moving market, and we've got an uptrend on the 10 and we've got an uptrend on the 5, and we have to now keep in we have to now keep a really close eye on whether or not we're going to decreasing volatility. Now, the way to never ever get caught out by decreasing volatility mode is every time you make the highest close in a trend, say highest close in the trend, and say to yourself, is it on an uptick or a downtick? So here, our trending is a 2-stage process. Stage 1, we touch the upper Bollinger. Stage 2, we have a single bar with a higher high and a higher close. We're trending. Happened on an uptick. We have the highest close in the trend, happen on an uptick. Highest close in the trend, happen on an uptick. And as long as every single time you get the highest close in the trend, you just mark, is it an uptick or not, you can never ever get in trouble. It's only when you just mentally clock off that you start getting fucked with, right?
Yeah, Scott, talking about mistakes and then making one mistake and after that making a series of mistakes just happened to me yesterday. Now, the shit show that happened is now I ended up having 4 hammers in a row, and I was a bit worried about this. Like this isn't a normal behavior for the system. So what I was doing wrong is basically me and Nick, we were trading together, and yesterday we had really long series of DV mode on.
For sure.
So we were trading.
Keep talking.
Popping up. Yeah, hammers came popping up, and I had this little idea that you have to I was a bit confused actually, that whether to keep the trades on after how many bars and all that shit, whether to keep that on or not. But Nick was determined that what we do with hammers and shooting stars is that we wait for the low to be broken, the way we wait for RTB and RTC setups. So we kept on doing that. We kept on taking the hammers after second or third candle, which weren't a setup actually, and we ended up losing 4 hammers in a row.
Oh no, dude, no. Oh,
otherwise it would be just one loser, one loser maybe. The hammer was a single loser.
Oh, dude, that's okay. So what I have typically found in the past is that usually the first mistake isn't that bad. Like the first mistake is pretty innocuous, like nothing terrible. And then it's only the second and third mistakes that turn out to be like really like, what the fuck are you thinking, dude? Like those kind of mistakes.
Yeah, that ends up being a series of mistakes. So now I just want you to clarify this again.
Sure.
It might,
Okay. So let's clarify. Let's say we have this. The rule is, our entry point here is for this shooting star is the nearest half pip or full pip below the low of this candle. The low of this candle is 60.5. So the nearest half pip or full pip is 60, which is right here. The rule is if our trade is not entered on the very next bar, we only leave the order on if the nearest half pip or full pip below the low of this candle is the same as the nearest half pip or low below this candle. If it's not the same, we cancel the order. Do you need me to go over that again?
no, this first point is clear, but for how long, for how many more candles do we keep this thing intact? Let's say the second candle after the shooting star.
I've never seen it happen more than 2 in a row, but I think it's possible for it to happen 3. I didn't put a limit on it because I don't like putting extra rules if we can avoid extra rules. But in a practical sense, I don't see how it would be possible.
Actually, yesterday a situation happened like that. We had a hammer candle formed, and after that we had 2 subsequent candles with more or less the same half pipe range as the low of the hammers or the high of the hammers.
Gotcha.
So the third candle took us into that hammer. So what would you say? Was that a valid trade or was it not?
Do you have the time of that trade yesterday? We're actually just going to have to iron this one because it might
go back. We might go into DB at the end of
Yeah,
this.
I'll go to DB. So as soon as we hit a lull in the price action, let's go through that yesterday because. Okay, so let's talk a little bit about mistakes and how you deal with mistakes. So the first thing I like to do is get your hands off the steering wheel. So if you've made more than one mistake on any given day, you're not gonna like make it all back. You're more than likely to fuck it up even further. So you just got to at the second mistake for the day. I don't care who you are, how good you are, you're done for the day. That's you. Okay. And the first thing that you have to do when you've made a series of mistakes and not just one, is self-care, because we can get really down on ourselves and start to like use like negative self-talk and like, oh fuck, I can't do this. Oh, I'm such a loser. And why can't I just fucking do this fucking thing? So the first thing you want to do, okay, are we in DV? No, we have the highest close in the trend on an uptick, so we're good. So the first, getting back to it, the first thing you want to do is self-care and just be really, really kind to yourself. So what I do is I imagine it was a friend of mine who I really care about trading telling me about making a couple of mistakes. And how would I react to someone, how would I react to you telling me you've made a bunch of mistakes? I would be like, oh, dude, that sucks, man. That's really, really hard. Like that's fucked. Like I feel you, I've been there before. Like I would be empathetic. And you've got to try and be empathetic and kind to yourself in a way that it's really tempting to stomp down on yourself and say, oh, this is fucked. It's unacceptable. You're just a shit trader. And like that kind of stuff really, really echoes around in your mind, and it lasts a long time. So the first thing I do when I make a mistake is I stop trading and I go and do all my favorite shit. So the things I personally like to do, I go to this Japanese bathhouse and sit in this steaming hot bath, and then I go to a cake shop that I really like that makes homemade cakes, and I just sit and I scoff fucking cheesecake until I feel sick. But you know, sometimes I have a massage, or I'll go to a really, really expensive meal and eat like 3 courses by myself, or like you just do stuff that's like special occasion treat stuff, like whatever it is that you like to do. If it's like, you know, going to the park with your dog and throwing a ball around, just go do that. Like whatever's the most fun thing you can possibly think of it's very important to condition yourself that, like, you're not the enemy here. You're not fighting yourself. Like, you just got like total sympathy for yourself. Yeah, this is a really fucking hard thing. Okay, so we're in decreasing volatility mode. So we have the highest close in the trend. We've said, did it happen on an uptick or a downtick? For the first time, from this bar to this bar, it's happened on a downtick. So we are no longer taking mean reversion trades. Instead, we're waiting for a hammer candle that touches at least this 8 EMA. Now, if it touches this 8 EMA, we're going for 1.1R. If it touches this purple line, we're going for 2R. Why? Because if the elastic band has snapped back further, we can go for further on the upside.
And about this 2-hour target, Scott, we're not adjusting the stop to break even after 1 hour, right?
Thank you, John. Sorry, one sec, Sherry. John just told me my mic is too high. Is that better? Is that microphone level okay, guys?
Yeah,
Sorry
it's a
about
bit
that.
better now. Yeah.
Do you want it smaller, lower again? It's okay? Okay.
Yeah, you're good, Scott.
All right. Thanks, Ben. Sorry, guys. I must have bumped it. Sorry, continue, Sherry. I didn't mean to interrupt.
Yeah, Scott, I was just about the 2-hour target for the hammers or shooting stars touching the 21 EMA. We are not adjusting the stop to break even after 1 hour, right?
Yes, we are. Yes, we are. And that's John's research, and he was adamant about it. And I think it's a good philosophy.
I remember you saying that because hammers and shooting stars, after that, the price action is a little bit more than choppy than it is normally. So we don't do that. We don't adjust the stop. We keep them running. Right?
No. I was wrong about that. And John's on the call. He can clarify. We're basing our alteration to the system on a bunch of very detailed research that John did. So yeah, that's the way he did his test, and it worked out really quite well. Okay, now there's an interesting situation coming up. We have the potential of a setup forming here. It has to bounce off here, and if it bounces and forms a hammer, what is that telling us? It's telling us that the market is trying to go down and failing, right? If we get that hammer and that hammer touches the 8 EMA, which it may not do, it's going to be a real rush to get this order placed. It's going to be a prick of a thing to do. So the way that you prepare for it is look at the ATR value down here. Now, this ATR value of 0.00018 means that the average candle size is 1.8 pips. So we can make an educated guess about what our position is going to have to be if we get a setup. So our educated guess is that if an average candle is 1.8 pips, almost certainly our trade will be a 3 pip stop, 3.5 pip target, or less than that, right? So I would prepare a position size based on a 3 pip position size, 3.5 pip target, and then place that and then adjust it once it's on. That would be that's a way that you don't get. So here we're at 2:31 and 20 seconds. We've got 40 seconds to go. If this painted a setup, which I don't think it will be, it would be very, very easy to get caught napping, and that's what we don't want.
Yeah, Scott, but it isn't exactly touching the EMA. So
no, it's not. It's not going to touch the EMAs. But if it closed up here, that EMA would bend, and it could technically. It's possible, unlikely, but possible. So the EMA is 954 and the low is 957. It would, if it closed up here, it would be able to do it. It's unlikely to happen, to be honest. And
but the rule is that it has to be an exact touch. It's not good enough.
Near enough is not good enough on the 2. It has to be an exact touch, and it wasn't either a hammer or an exact touch. Now, could still happen this part.
Yeah.
Hammers and shooting stars are really good edge, by the way.
Very good edge. Very, very good edge. And not just not just because they're a good edge, it's because they happen at the time when the vast majority of our system is mean reversion trades, RTVs and RTCs. Hammers and shooting stars happen at a time when you're most likely in the middle of a day where mean reversion trades aren't working at all. So you might have 3 losing trades, and even just 1 or 2 winning trades really it really takes the edge off. You know, instead of 3 losers, we got 2 losers and a winner, and down a little bit, but that's not so bad. You know, it just really takes. They happen at exactly the right time to smooth the equity curve out.
Yeah, you're right. I was always for the past 3-4 weeks that I'm trading, I'm always excited about taking hammers and shooting stars. But there's always a risk of missing these things because sometimes they move just so quickly that you can have a lot of slippage, or you won't just be able to enter it.
You have to be ready.
Yeah, but you have to be really ready. But apart from that, I was really, confident and excited about taking shooting stars and hammers. Thus, they don't happen that oftenly. But yesterday, when I was getting my ass kicked all the way in a row by all the hammers, so while I was actually trading that, me and Nick, we weren't thinking that we were making mistakes. We were thinking that we're actually following the rule. Until and unless I ended up at the end of the Euro session when I posted my results in the group, and there was, I guess Anthony replied it that no man. You're doing it wrong. Like it has to be two candles after the hammer is off. Like,
oh, dude, I feel for you, man. I feel.
Yeah. But anyways, I felt good at the end of the day because I was really thinking like this is fucked up, man. If the system is doing this, like painting 4 hammers and all four of them are losers in a row, that is fucked up. So, but then I realized I was making a mistake, which is fine then.
Let me talk about that a little bit. So, what is a hammer? A hammer it's not just like a name. A hammer is a failed attempt to drive the market down. So if we look at this candle, what's really happened? The market's pushed down, the buyers have stepped in and driven it up, right? If we look at this candle, the buyers have stepped in and driven it up. So what this is evidence is that the sellers are running out of pressure and the buyers are taking over. If that's really true, and we're not just bullshitting ourselves, then the buyers really should take over. They should break the high of this candle very quickly. And if they don't, it's somewhat suspicious. Like it really is quite suspicious. Like, we break the hammer and then we start to go up. We break the hammer and we start to go up. Like if that doesn't happen, there's something really rotten in Denmark. And we probably don't want to be in the hammer. Now, we have to ask ourselves, are we still in decreasing volatility mode? The ATR value is 20. The ATR value here is 20. So it's an equal ATR top. Actually, it's not. This one's clearly below. So we're still in decreasing volatility. If you're using TradingView, just double-click to make the panels big or small. Okay, and we're in decreasing volatility again, so we remain in decreasing volatility.
Scott, while we're still in it, can we go back to yesterday at 504, the situation that
Sure.
I was talking about?
Can you let me know if it looks like we got a setup for me?
Yeah, sure, I would. I'm having an eye on this.
504, you say?
Yeah.
All right. So let's have a look at what happened. So, yeah. So there was this long here, touch the upper Bollinger.
No, Scott, you're doing 25 November.
Sorry?
I'm talking about, you're going back on 25th November. I'm talking about 30th, yesterday, Monday.
Sorry, my bad. All right. Oh, God, that's awful price action. Okay, so we are trending up on the 5 and up on the 10. We start trending up on this bar. We go into decreasing vol here, still in decreasing vol. Decreasing vol, we paint a hammer. The high here is 84.8, so our entry point is 85. Our high here is 84.8, so we leave the order on. Entry is 50. Entry is 85, sorry. Here, the high is 84.9. We leave it on. Here, the high is 850. So we get an entry. Doesn't work. We're stopped out. Stopped out here and painted another hammer.
The same candle that stopped us out was another hammer actually.
Yes, that's a pain in the ass. So here we have a high of 84.2. Our entry point is 84.5. Here, our high is 83.9. The entry point is 84. So this is not the same. So we cancel this order. Do not take this. Then we get,
No, let's just stop here, Scott. The entry is 84.5.
yep, and the high is
And
80.
it's 3.9. So
Yeah.
is it, we're still half a pip, like not half pip, 0.6 pip actually, but still it's like, isn't half pip?
The nearest half pip above the high is 83.9, the nearest half pip is 84. 84 is a different value than 84.5. Cancel the order.
Okay, so the next candle, the subsequent candle has to be like higher than 84.2. It shouldn't be lower than 84.2.
It could be 84.1 or it could be 84.0, but it can't be 83.9 or below.
And if the same candle at 5 or 6, let's say the high of this candle is 84.1, let's say, but it broke the low.
But then,
It broke the low.
and if it broke the low down here, you would still leave it on. Now, the reason for that is it doesn't make sense at first, but if you think about what you have to do practically, if you're looking at placing this order in real time and it say breaks this low here, if you had to cancel your order, readjust, recalculate position size, fuck with a whole bunch of shit and do that under pressure, chances are you're going to make a mistake. And so it's not practical to if you had an algo, yeah, you would recalculate position size, but for a manual trader, just leave the stop where it is.
Okay. So for the candle at 450, we actually entered at the third candle after the hammer. So there's nothing wrong with it. Yeah.
So there's one losing trade, stops you out here, another trade that you have to place, which is never entered, and cancelled the next bar.
Okay, and there's another hammer at 654.
Let's have a look. 654. Okay.
This entered just immediately, and it was a very quick one. Like it happened at the very last second.
654. The high is 88.9, so that's going to be an entry. Yeah, immediate stop you in, take you out. 1 bar loser. Definite loser. And then
we got a RTV at 704.
Yeah.
Which is a winner.
Exactly so.
And another trade, Scott, we had a go at 8.00. So this is our.
Say again, please.
I was saying that at 8.00 we had a setup, but the setup triggered at 804 or 802. So that is out of the window of our Euro session.
That's out of my personal window. That's out of my personal window. Yeah. Now it's interesting. It's quite common to get a trade. Don't forget these are 2-minute bars. So this bar starts at 240, ends at 242. So I will take trades that start at 158, end at 2, because like the order is placed at 2. I'm in front of the screen at 2. If there's an order to be placed, I place the order.
No, but Scott, at 8 exactly, the setup was valid. We were in it, but at 8.00, the setup was valid. It triggered at 802 or 804, but it was valid while we were in the Euro session.
Yeah,
you don't take that trade and put it in the baseline.
No. If it triggers past 8 o'clock, I don't include it.
Okay. Well, I think it is the winner anyway.
And the reason I don't do that is because I find that subconsciously, at least, I'm always hoping my results look better. I'm always hoping that I get winners and not losers, and I don't want to do any greasy shit where I'm making my results look better than I am. The idea of having these results is so that we can match them. It's not like for bragging rights. It's just so that we can actually match them. If we can't match them, there's no point in having them, right?
Yeah, you're right.
Really nice trends so far. I hope we get a set up soon. Okay, so we're in decreasing vola. What throws us out of decreasing vola? The nearest pivot too high, which is here. So if ATR breaks this value, we stop looking for hammer candles. Now let's look at the ATR. Our ATR is still quite low. So almost certainly our trade is going to be something less than a 3-pip stop, but we're going to size it on a 3-pip stop, 3.5 pip target. So almost certain. So the way that I would handle that is make your order a 3-pip stop, 3.5 pip target, and then just drag it up. So I drag the stop loss up, so it'll be like a 2-pip risk or whatever it is. And this is the most difficult part of the system, right? And we may get a setup here. Stephen, on the 10, we have walking outside the Bollinger confirming evidence. So we have 4 types of confirming evidence. For a long, we have touch of the lower Bollinger. We have a trend with pullback to the moving averages. We have a decreasing volatility trend, which we don't have. We have an increasing volatility trend. And we have walking outside the Bollinger Band. So the way that this works is...
Sorry, Scott, I was talking about the trade earlier.
Oh, okay.
The one that Shari was talking about.
I think it was DV from memory, but I didn't check closely.
Okay, thanks.
I'll check it when I do the baseline later on those. Did you think it was or not, Stephen?
On my charts, I think it was DV at that time.
Okay. When we get a little bit more a little bit of a lull, let's go back and check. Francis, there's the ideal time to increase position on a system is in a substantial drawdown. As a general rule, over 5R drawdowns, and it's a really nice time to add position size. And why? Because it rips your heart out when you increase position size and you increase into the teeth of a drawdown. So, like, let's say you've just made 10R and you're up 10R, and then you double your position size and you get a 5R drawdown. You've just wiped out your previous 10R winners. It feels much better to do it the other way. But no, as far as just adjusting it on the basis of a single day, like, I would never do that. That's a good way to fuck yourself.
And Scott, do we have a certain time frame? Like, we have, let's say we put this 5R minus 5R drawdown as an average or as an ideal to increase the position size after that. So does that 5R drawdown has to be in a single day, 3 days, in a week, or something like that? Or after any 5R drawdown, we can potentially increase the position size?
To be clear, I make my position sizing decisions absolutely discretionarily. I mean, I should probably systematize that, but I don't. So there's a little bit of feel involved. And so the way that I think about it is that any single day, no matter how bad, could just be one lucky day or one unlucky day, right? Like you just can't, like, you can just have a bad day. Like it can just happen, and it does happen. Happens all the time. So I would never increase position size on the basis of, okay, we had a 5R drawdown today. I wouldn't increase on that. But what I would like to see is a nice steady edge down over a couple of days or a week. Probably even a week and a half would be perfect for me. We have to keep an eye on this because this could become a setup. Really.
If it does, it is definitely minimum viable hour. Or at
Yeah,
least
for
3
sure,
minutes.
100%. And you can tell because our ATR is still really, really low. Even with the uptick, it's still very, very small. So any more questions, stuff you don't understand, rules you need clarified? Kenneth, when decreasing volatility mode up is on and the trend ends and a new downtrend starts, without DV mode having ended, does DV mode switch direction? It does switch direction if you get a downtrend and then the lowest close in the downtrend and you're not trending up on the 5 and up on the 10. Which is really quite a difficult thing. It's quite a difficult confluence of things to happen. So in the real world, it doesn't happen that often. Possible, but doesn't happen that often.
And even if it does happen, Scott, the confirming evidence part keeps us from getting fucked up. You know.
Okay, so that's Sherry has got a really good question. Okay, so we're DV up now, right? Well, we're not anymore. I think we're out of it. So if we were DV up, look at our confirming evidence. We've got all kinds of up confirming evidence, but for us to go down and start getting down confirming evidence, very, very difficult. And Sherry has rightfully pointed out that in a practical sense, it's very difficult to see a situation how that would happen.
Yeah, I'm saying this because I guess I encountered a situation like that. I'm not sure when. I might be wrong about that, but I remember I've had a situation like that in the past few weeks. But that was pretty much clear that I don't know, the confirming evidence was really clear about that. The DV, I think we went in DV up and then we went in DV down, but DV down wasn't really relevant because the confirming evidence was no way, in no circumstances pointing it was.
It's certainly possible. It's just extremely difficult for it to happen.
Yeah.
Right. So one of the things that I'm trying to be is a little bit more disciplined about physical movement and doing a little bit of stretching and making sure my physical needs are taken care of. I haven't got it on today, but I've started using like a Google Speaker to time my shit. And at 50 minutes, I like to take a we might get a setup here. At 50 minutes, I like to I stand at the back of the room and watch the charts, but I do a little bit of stretching and I have a sip of water. And if I need to go to the toilet, I go to the toilet. And I just don't think it's good for peak performance to be sitting at your screen for more than an hour. I think I definitely trade better when I take just a minute or two sitting up. I definitely trade better.
I'm sorry, Scott, but we're not in DV anymore. So
sorry, my mistake. Thank you, Sherry.
normally after somewhere around 5:30 and up till 6 or 6:30, normally the DV the volatility is a bit low and it's rare to it's not that quite often to get a trade in that particular range of time. So that can be a good time to take a bit of a break. That's what I've been doing.
The first hour, the hour that we're ending now, is the lowest edge of all the times that we track. So technically, what we've just been through is the worst time for the system.
Yeah.
And why do I still do it? Because I started out doing it that way, and I thought it would make me look like a dick if I changed, just because the results look better a different way, and I didn't want to be a dick like that. So. Yeah, just so if you're timing your own trading and you think, oh, Scott starts at 2, I have to start at 2. Like, that's not the case. I start at 2 because I've always started at 2, and it's not quite as good.
But Scott, even with this window of time in your spreadsheet, the results are still pretty amazing, man. There's no question about it. So, yeah. I mean, definitely, this is not as good as all the other hours of the day, but still, man, even having this in the results after having this hour, I mean, they're still outstanding. So
yeah, I don't mind. It's not so terrible that it's a deal breaker. It's just not as good as it is later on. But later on, I got my family and my kids' bath time and all that crap and. Yeah, just doesn't work for me. Okay, so we have the highest close in the trend. I think the close is on an uptick, so we're not in decreasing vol. I think the odds are quite strong that we tag this upper Bollinger and then paint a short setup. So fingers crossed we do.
Okay, Scott, another beginner question over here. Me and Nick, there was another instance when we got confused about this thing. Now we have the highest high at 240 bar.
Mm-hmm.
That is the highest rise. Okay, so highest rise at 240 bar. So now from 240 bar onwards, if we get 20 more bars without touching the high or crossing the high of 240 bars, we're out of trade.
We're not trending up anymore. But if you think about so what happens if we get 20 bars without breaking this high, which we just broke? We're not trending anymore, but there's no requirement for trending to take a mean reversion trade.
No, I'm not talking about mean reversion. I'm just talking about this statement that you just gave. The breaking of this high. Do we have to like break above this high, or do we just like go up and have a wick higher than this, and we're back in trend?
No, we need the highest close in the trend. So to have the highest close in the trend, you have to be trending, which we are.
There was another thing. There was this other thing for the 20 bar without making a highest high, or without going beyond the highest high in the trend. So if we touch the upper Bollinger, but the high, for example, the high is at the 240 bar, and we never, after 10 or 15 candles, we never touch the high of the 240 bar, but we touch the upper Bollinger. So we still in the trend, and we start counting the 20 bar again.
Correct, but it's irrelevant because that's not. In a practical sense, that whether or not we're trending or not on the 2-minute chart is relatively irrelevant. Where are we trending or are we not trending really comes into play is on the 5 and the 10-minute chart. I can't remember back in the real world. It's never going to be a thing in the 2-minute chart. Because
actually, there was a situation that we had, and it was the same thing that I'm talking to you about. On the 5-minute, we had a highest high in the trend, like the highest value in the trend.
Yep.
And we with 10-15 bars after that, we never broke that high, but we touched the upper Bollinger and we had that. So we wanted to know whether that was the right confirming evidence, whether we were still trending up or not. And me and Nick, we were having a little bit of conversation about this.
We're talking about on the 5 or the 10, not on the 2, right?
That's what I'm talking about. No, I was talking about on the 5 that we had a situation where we had a setup on the 2, but on the 5 minute, after 20 bars, yeah.
So this is a really good question. So let's look at the rules literally. The rules literally are, once we start trending, we're trending until we stop. What stops us trending? One of 3 things. Close above, close below, close above, which I'll get into in a bit. Touch of the opposite Bollinger, which is irrelevant, and 20 bars without making a new high. So without making a new high, you can interpret that absolutely literally. So if it's an equal high Does it make a new high? No, because that like it has like 20 bars without making a new high, and it stops trending. So if we have here and we have 20 bars and we make an equal high, it's gone 20 bars without making a new high. So if you read the exact words of the rules and interpret them literally, like a computer, that gives you your answer. So it shouldn't be a question of opinion. It should be a literal interpretation of the rules exactly as they stand.
Okay, but what if we do not make a new high, but we touch the upper Bollinger again?
So again, where in the rules does it say any fucking thing about the upper Bollinger? The rule is you are trending until it goes 20 bars without making a new high. That's the rule. It doesn't say anything about any other shit. No extra shit. Like, just read the rules, like, and interpret them as though you're an alien from outer space, or like a 5-year-old kid who never heard of trading before, and like interpret them in the simplest, most literal possible way that you possibly can.
Okay, I might be wrong, Scott, but in one of these live sessions on Tuesdays, I guess I remember you saying something like this: that if we touch the upper Bollinger again, we start counting the 20 bar range.
No. The guys in the Platinum Group would eat me alive if I started doing stuff like that. They would they would eat me like the sharks that they are. No. And please, anyone who's listening to this, anytime that you see me doing stuff that's greasy or that's not okay, or any of me bending my own rules, call me out on it. Like,
Scott, sorry, it's John.
Hey, John.
I think what Surya is getting confused with is a new high or a Bollinger Band touch restarts the count of above, below, and above.
Aha. Okay. So that's a completely different thing. But an equal high does not restart the count.
Okay. So I think I was questioning the sentencing it wrong, phrasing it wrong.
Could be. I'm not saying that. I'm not saying that I'm the most precise person literature-wise. I try and be, but I'm not. Like, I'm not that major.
Okay, so if we touch the upper Bollinger without making a new high, we still counting 20 bars in that particular case, like close above, low above, right?
Yeah, the rule has nothing to do with Bollinger Bands, so it's just irrelevant one way or the other.
Okay. Okay, Simon just asked this question, Scott, and this is the same mistake that I made a few weeks back.
Okay, Simon, do we still take single hammers even after the trend down starts? And okay, so 2R hammers, they have to touch the MAs. They can't be passed. To answer your question, and do we still take single hammers after the trend down starts? Yes, we do. In a practical sense, why did I leave that in? In a practical sense, it hardly ever happens. It might happen like once or twice a year, and it wasn't worth adding an extra rule and an extra condition for something that happens like 1 in 1,000 times. So as a general rule, if you can not, every extra rule that you add to your trading system comes at a cost. The more rules we have, the closer we are to disaster. And what is disaster in trading systems? Disaster is when your system stops working, right? We've got a system that works perfectly and it's steady and smooth and consistent and it does the same thing day after day after day. Disaster would be if it stopped working, we had a 30-yard drawdown. The more rules that we add, the more danger there is of that happening. So my number one priority is not making the rules make sense, or not making the system better, or not making not making it get a higher win rate. My number one priority is making sure that in a year's time, 2 years' time, 3 years' time, the shit is still working. And the only way that we can do that is by being very, very ruthless about adding new rules. And Francis brings up an interesting point. When I started trading this on ES, it's quite embarrassing actually. The system was in like a proto beta version of what we trade today. It wasn't nearly as good. But I started trading the hour before the New York Open, and I would do an hour before I went to bed, which is like 8 o'clock my time. I would trade from 8 to 9. And I had a theory that that was going to be the best time of all. And it turned out I was completely fucking wrong, and that was a negative edge, and the best time was later on. So yeah, so and I'd been quite public about I thought that would be the best time for it, and that was the time I was trading. If you look back on my YouTube channel, there's a bunch of video of me trading ES live at that time, and it turned out that hour is just a total bust. It's like a terrible time to trade. So yeah. Ooh, all right. Okay, so we touched the lower Bollinger. Do we have confirming evidence? We're trending up on the 5 and we have a pullback to the moving averages. We're trending up on the 10, we have a pullback to the moving averages. So if we get a hammer candle here, the entry point would be 66 and the stop loss would be 63.5. So that would be a 3 for 3.5 pip situation. Unlikely to happen. Impossible to happen now, actually. So we have a touch of the Bollinger. We're going to have a higher close, most likely. We've got 1 minute and 10 seconds to go, and then we need a lower close, and then we're good to go. So it's quite likely that in the next couple of minutes we're going to have a setup, and a good setup. This is a perfect setup, actually, and it neatly illustrates if we have a 3-stage process to get our long mean reversion setup. 1, touch the upper Bollinger, 2, higher close, 3, lower close. So if you look at it conceptually, this fits the rules of a mean reversion setup, but it's not a mean reversion setup at all. If we look at the 5, it's really a hammer candle here. It's a trend following setup. If we look at the 10, it's a hammer candle on the 10. It's a trend following setup. So it looks like a mean reversion setup, like one of these. Touch of the Bollinger, lower close, higher close, or here, touch of the Bollinger, higher close, lower close. It looks like one of these, but it's got nothing to do with any of that. It's totally the opposite. What it really is a with trend continuation setup on a higher time frame. And let's have a little talk about how and why that works. One of the strongest edges in finance is when people get caught the wrong way. So you've got traders on the 2-minute chart or the 1-minute chart or the 30-second chart thinking it's going down, whereas the traders on the 5 and the 10-minute chart are thinking it's going up. Who's going to win in the contest between the little guys trading the 1 and 2-minute chart and the bigger guys trading the 5 and the 10-minute chart? The odds are very strong that the big guys win. That's just the way it works. So that's what we're trying to achieve here with this setup. Now, our target for this new setup when it forms has got to be, it can be a little bit past here, like a pip and a half or so above here. So this is unlikely to be a setup in this bar. It's got to pull back more substantially, and we may miss out. Hey, Chris, how are you, man? Yes, it has. So see here, we have the setup. We have a touch of the Bollinger, higher close, lower close, but our entry would be here, our stop loss would be here, the target would be way the fuck up here. So that is not a good trade to take. So we want to wait until we get a more substantial pullback. So if we enter here, our target is here. If we enter here, our target is all the way somewhere like way up here. It's just, so one of the key ways that you can improve the performance of systems is by excluding shitty risk reward trades.
Scott, isn't this a 2R trade, being trending on the confirming evidence?
Definitely a 2R trade, man.
So there's still got to be high and tight.
It's
Before you take a trade.
now that's a really, really good question. So high and tight has to be on a 1.1R basis, but then we actually take it on the 2R basis. And the reason for that is that it was just too difficult to untangle the back test and untangle high and tight decisions over like 1,200 trades. It was just really going to be just too hard. Okay, so let's keep an eye on this trade. So the entry point here would be 70.5. The stop loss would be 63.5. So that would be 7 for 7.5. So 70.5 plus 70.5 plus 7.5 is 78. And that would be all the way up here, which is just too far. So we need more of a pullback. 70.5, 63.5, yeah, too far. And that is a shame because that is a really nice looking setup.
Hey there, Scott. It's Mike Jones here. Sorry, it's the first webinar I've been on with you.
Hey, Mike. Nice to meet you, man.
I'm a bit confused here. You're mentioning 70.5 and 63.5, but on your chart, I'm seeing 1.97 and 1.96 on the y-axis.
This is a really good question. Okay, so these long string of numbers, confusing as fuck, right?
Yeah.
Okay, so an easy way to not get confused by very long strings of numbers, and if you think this is bad, you should wait until you trade the USD JPY. It's even way worse, is to just read the very last three of them.
Right, okay.
So to stop it messing with your head, instead of reading this, the number here, the high is 1.19702.
Yep.
That doesn't mean anything to humans because we're not computers. An easy way to read it out in your head is to just read the last three numbers. And the last three numbers are 702. And an easy way to read those last three numbers so they actually mean something to you is instead of saying 702, say 70.2 pips. Because that's actually what it is. It's 1.19 and 70.2 pips. That's actually what it is. So it's just an easy mental hack that you can use to if you have to get out a calculator and start adding up 7-digit numbers it's very difficult to do.
Right. Yeah.
But if you read it as 70.2, 70.5, do all the math in your head. And doing the math in your head, huge advantage, like just huge.
All right, so if I'm reading you correctly, if you were to go in on a long trade here, you'd be looking at a 7, you were saying 70.5, but that would be 1.197.
It's changed someone here. So let's calculate. Let's calculate the order here because this bar is going to close in 50 seconds. So I've got to do it anyway. So the high here is 1.19686 or 68.6 pips. So the nearest half pip above 68.6 is 69. So the entry point would be 69 pips. Our stop loss would be the nearest half pip or full pip below the low, which is 63.9. So that's 63.5. Our entry point of 69 minus our stop loss of 63.5 is 5.5 pips. So we would take this if a target of 6 pips above 69 is below about here. So would that be the case here? So 69 plus 6 is 75. Still too far. Is that right? Yeah, that is right. High. So the target here is 75. That it's got to be within a pip or so of this high in the with trend direction. So we don't quite have it here. We might get a further pullback this bar. which is annoying because this is a trade I want to take, right?
Okay, cool. Thanks. Anyway, I get what you're saying about you just take the last 3 digits and you ignore the rest. So thanks for clearing that up.
Really good question, man. And it's very difficult to do position sizing in your head without that.
Yeah, absolutely. All right, cheers.
Cheers, man.
Any entry above 68 doesn't look good to me, Scott.
Yeah, I'm with you. Sharon. I think it's unlikely that we get a setup, which is annoying to me because
Okay, now Scott, if we get another touch of the Bollinger, the same lower Bollinger, what would you do then?
a second touch of the lower Bollinger does not invalidate the setup. So so it's irrelevant for purposes. So again, our setup rules are read literally. So do we have a touch of the lower Bollinger, a higher close than a lower close? Yes, we do. The fact that it's subsequently touched the Bollinger again is irrelevant.
There was this one instance when we were talking about the trade didn't get a fill. It's been quite a while, and then it came all the way back, and it was high and tight, but it had another touch of the low Bollinger. I remember we adjusted the position sizing.
There was one a couple of days. There was one on the 25th. That happens really quite regularly.
Okay, now this might be behind type, Scott.
Yeah, this one is high in time. Okay, so if you're watching this, if this breaks the low, if this makes a new low, so an equal low is okay, this setup is off the table. So the low here is 63.9, and the low here so far is 64.0. So this is an ideal looking setup. We're going for 2R. So our entry is 66.5. Our stop loss is 63.5. So we're risking 3 pips to make 6. Okay, and I've adjusted my entry, and assuming that doesn't break the low, that is and it has broken the low. So this is, so you can see the low is 63.9 and the low here is 63.7. Setup is off the table, and we can't go into decreasing volatility down because we're trending up on the 5 and up on the 10.
This happens very regularly, but it's always annoying, like having a good setup in front of you and
Yeah,
it's out of your hand.
and quite often you see the case that in the fullness of time, I'm really glad I didn't fucking take that. There's a thing that Daniel and I used to call the curse of the perfect setup, is that when things look great, when things look like oh, that's a slam dunk, those are often terrible trades. It's the ones, and conceptually, what's the best trade you can take? The best trades are the ones that squeeze your ass to take, that really like, oh, I don't want to take that. I hold my nose and take it anyway. Those are generally the best trades. The ones where like, oh, I can't wait to get a setup here. Fuck yeah, we're on. Those don't work out very often.
Yeah.
And if you think about it, the reason for that becomes obvious, right? Like, it's like buying Bitcoin last week. It's just too obvious. Like, that's not going to work. Doesn't matter how perfect the charts look. Like, the shit's just not going to work. Like, everyone's doing it at the same time. Like this is not an easy game to win at. So if dumbasses are going to be looking at it thinking, fuck yeah, I've got to get long here, it's probably not going to work. Chris just says that the NQ fell out of bed. Let's have a look at the, oh, sorry. Let's have a look at the NQ.
You'll be on delay, so you probably won't be able to see it.
I don't
Yeah.
pay for it.
You only just get the start. Oh, you got some of it there.
Yeah, it's falling out of bed.
Yeah, it's had a bounce on one candle bounce, and now it's this candle looks like it's thinking about what it's going to do.
All right, so we have a potential setup here. This is almost certainly going to be a 3 for 3.5. This is a setup we have to take. Okay, so first thing we do, check the time. It's 3:18:25 seconds. So we've got a little bit of time to make this happen. This has got to be either a hammer or a lower close to be a setup.
Hey Scott, how is Interactive Broker when it comes to slippage, man? Do you get it, slippage, and how often?
On futures, it's extremely good. On FX, it's good, except in the Asian session. In the Asian session, it's inadequate. Most times you can, most times that I would trade, you'd see a minimum of 30 million on the bid, 30 million on the offer, and I'm not trading position sizes that large. So slippage is a function of market moving quickly rather than there's just no liquidity. So as a general proposition, I don't want to sound like an Interactive Brokers fanboy. Like, I mean, they're not perfect. Like, I guess I'd say it's okay. Futures is just far better for slippage than FX.
It is overall, I guess, better for slippage.
Futures is way better. On average, one in every 15 trades, they get one ticker slippage on futures. It's like, it's just night and day better.
We might get a setup, but this is definitely not high tide.
I don't think that's going to be high and tight, but let's check anyway. So that's 69 for 63. So that's 6 for 6.5. So that's 75.5. So that's all the way up here. That's not high and tight.
I mean, you can tell this by just the looks of it. So.
We haven't got confirming evidence on the 10 yet either.
No, we are trending up on the 10, I guess.
We're trending up, aren't we?
Yeah, we are.
For sure.
We are, but it hasn't touched the MA.
You sure? Like, this is the 10, bottom right panel.
Yeah, this is the situation where that the touch on the previous bar counts until you break the high.
Oh, right.
We might potentially get into a Bollinger squeeze, Scott.
I believe so. I agree. So, guys who don't know much price action, this situation where Bollinger's pinch is pretty unsustainable, and you see it here. You see it back here. Usually it kicks off. It didn't here, but it has a strong tendency to kick stuff off.
It is funny how your mind works, isn't it? Because I tend to prefer the Bollinger trending than the trending, but I've probably got no reason for that at all.
I actually do too. It was the first thing that I tested when I was testing different things. It is funny how the mind works. Like, you know, it can be a room full of women and the chick is not the hottest one. You just look at it and go, wow, that's for me. It's my jam. You know, we're not rational creatures. When I first got off drugs, like 14 years ago, I used to go to these Narcotics Anonymous meetings, and there was some really dodgy people go to Narcotics Anonymous meetings, obviously like street junkies and like, you know, homeless people and you know, people who've been homeless a long time. And there's some pretty sad and sorry looking women in there. And every now and again I would see one and like she's like a scraggly homeless lady looking bag lady, and I just look at her and go, I could fuck the ass off that. I'm like, what are you, fucking nuts? Like our brains just don't work the way that we think they work, you know?
Yeah, especially with beer goggles, eh?
I'm glad I don't do that anymore. There've been some poor choices in my life, believe that.
Scott, there's something wrong with your email that you just sent this morning.
Yeah, someone else said that too. I don't know, I must have fucked it up. Chris B, I married my poor choices. One of the few things I got absolutely right was my wife. So we need a significantly tighter entry than we've got here. So here, our entry would be 68.5 and our stop loss would be 63. So that would be 5.5 for 6. 68.5 plus 6 is 74.5. Yeah, just too far.
I guess somewhere around 73, 73.5 would be fine.
Sorry, say again, please, Sharon.
I'm saying somewhere, a target somewhere around 73 or 73.5 may be fine.
Yeah, that would be totally fine. So, I agree. Well, this is annoying. It's highly unlikely we get us set up now after all this time of waiting.
Scott, it's possible that it would become high and tight, but
Very possible.
but over time, the longer it takes, is there less likelihood of it snapping back, or is it completely unrelated?
Now that's an interesting question. And I think it's one of those situations where my memory of things is probably as unreliable as most people's about anything. I certainly wouldn't be in any hurry to trust my own recollection about that. I've got it in my head. The way it feels to me is that the best setups are like those quick 3-bar, bam, let's go. Like that's the way it feels to me. But I don't know if that's right. Certainly, I have a strong preference for, that's fine. Like this. Couple of bars, 3-4 bars. Yeah. I honestly, I don't think I could trust any of my recollections about that. Sorry.
No, it's good because basically, as you say, if you really want to know, you got to test it.
Yeah, Chris is tracking a whole bunch of different stuff, and any intraday system, there's very strong and significant time of day edges. Time of day edges are the most significant time of day and time of volatility so trading longer time frames like daily charts is pros and cons, right? So, for example, the guys who say, "Oh, a chart is a chart is a chart," and it doesn't matter what time frame it is, and you don't even need to know, that's all crap. You would never ever get a bit of price action like this on a daily chart. Just couldn't happen. Daily charts are extremely normally distributed, so you never get, or hardly ever get, massive, big, giant bars on the same screen as tiny little bars. It just doesn't happen. So daily charts are drastically more normally distributed. Weird stuff doesn't happen as much. But you run into longer time frames have their own specific problems in that if you're trading daily charts, most daily charts, most systems will give you a setup, once a month-ish or a little bit more than that. It's not enough to make a living off. So you need to trade multiple markets, and multiple markets interact in ways that are fundamentally unsatisfying and can tie your head in knots. And it's a particularly thorny problem for system developers to get around. So there's pros and cons. From Ben, for confirming evidence, how many bars back do you look for the 5 or the 10 minute? Okay, so good question. So let's say I'm tracking, this one wasn't high and tight, but let's say we're tracking this setup here. It wasn't high and tight. Move your mouse onto the cursor of the bar that makes the 2 minute low. Now look and see on the 5 and the 10, does this same bar touch the Bollinger? So you can see right here, check it out, same bar. And where can it be? 95% of the time it's on the same bar. It can be one bar either side of it. But it's quite rare for that to happen. Really good question, Ben. In practical sense, almost every time it's same bar. Okay, do we have confirming evidence? We've just touched the upper Bollinger. 965 is the high. The high is 76.5. The Bollinger is 76.5. So we've definitely touched the upper Bollinger. We may go into decreasing. Are we in decreasing vol? Did we touch the upper Bollinger here? 726 is the high and 726 is the Bollinger, 725 is the high. So we're not trending until here, so we're not in decreasing vol.
No, we're not.
Sorry, Sherry?
We might start trending now. I said we're not trending yet. We might start trending now at this bar. We might not.
Are we not trending?
No, on the 2 minute we are not trending.
Yes,
We
you
might
are,
start trending at the close of this bar.
you are correct. You are correct. Thank you.
We're in DV score.
We are in DV. Okay, so for the guys who joined late, highest close in the trend. Did it happen on an uptick or a downtick in ATR? Clearly, on a downtick, we're in decreasing volatility. So we're not looking to go short. Now we're looking to go long.
Scott, at the 330 bar on the 5 minute, if let's say we were supposed to have a setup on the 2 minute as opposed to the 330 bar on the 5 minute, so what would be the confirming evidence?
For a short or for a long?
No, for long.
I don't think we.
Because we were trending up anymore.
I don't think we have confirming evidence. Yeah, no, we don't.
Because uptrend with the pullback confirming evidence is
Yeah.
no longer valid once we break the high,
Yeah.
right?
It's no longer valid. We don't have confirming evidence. And you know, it's tempting to like add an extra rule and say, but I really want to go long here, and I do. But that temptation, but I want to add an extra rule to cover this super rare situation. That's the thing that ruins your system in 5 years' time. You wake up one day and you're in a 30-yard drawdown because you added a bunch of extra rules to cover all these special snowflake situations, and then you just fucked up. So, you know, it's our job to be the adults in the room and say, if we miss a trade that we really wanted to take, or if we had to take a trade that we really hate every now and again, what's the main game here? The main game, our eyes on the prize, is can I still be doing this in 5 years, in 10?
I'm sorry to interrupt you, Scott.
It's no problem.
Sorry to interrupt you. DV is off, so we might get a setup.
Yes, we might. And we, okay, so Sherry brings up an interesting point. So once you're in the very early stages of a trend, so we only started trending in this bar, right? It's almost trivial to pop out of decreasing volatility in that situation. Why? Because the highest ATR value in the trend throws us out. And this is the highest ATR value in the trend. Sorry, this is the highest ATR value in the trend. So it immediately pops out. Almost mechanically, it's impossible for it to stay. And Ben Cameron is talking about GBP. Let's have a look, because there's a very tight relationship between those. Yeah, I think you're right, Ben. So let's a bit stop running. Okay, we could easily get a short setup here. That wouldn't, and this wouldn't be the worst short setup in the world either.
If you get a shot here, Scott, would you consider go for 25 bars as high and tight or EMAs is high and tight? What would you prefer?
EMAs, but in a practical sense, it's not going to make any difference. Now, for guys who are watching, we don't take into account any price action bullshit, even though I'm good at price action. But if you're looking at a trend that's been going a while, and this trend's been going a while, pretty much since we started trading today, and you see a big fuck off dick candle like this, this is a very strong indication. What does this candle represent? Open at the lows, close at the highs, range twice as big as the other candles. What this is the guys who didn't have the balls to get long here, or get long here, or get long here, finally, they all feel confident. Finally, it's a slam dunk. So are those guys likely to be wrong or likely to be right? The guy who didn't have the nuts to get long here, but finally he's got the nuts to get long right here, he's almost by definition wrong. So this is a market that looks like it wants to reverse, and look at our volatility. So you remember we were talking about volatility goes from extremes of high to extremes of low, and now look where we're at. We're looking at it somewhere in the neighborhood of an extreme of high volatility. This is a great time to look for reversal. Okay, and so we have a setup. 50 seconds to go on the bar, so it may not play out, but I think it will. So our low here is 81.1, so entry would be 81. Well, that's changed, sorry. Oh, no, it's not. Our stop loss would be 85.5, so that would be 4.5 for 5. Let me just recalculate my position size. Okay, so we've got a 4.5 pip range. Okay, placing order. Okay, so this is a shooting star, so it completes the retest concept setup. The order is placed, it's 0.1 of a pip below here. The target, where's my target? 5 pips less 81 is 76. Right here, still okay. Now, if we don't get an entry, we'll have another setup here, but the entry is slightly better, position size is slightly different. Now, as a practical matter, I wouldn't cancel one order and bother replacing another just because of the very small risk of me fucking it up. I'd just leave it on, and the position size wouldn't be quite right, but I would live with that rather than take the risk of like trying to be all like quick draw and you know, one of the worst situations is where you're behind the 8 ball and struggling to get an order placed in time. So Simon, do you prep a whole new order? I should, but if it's only a half a pip, I don't. Technically, you should. If there's any danger at all of both orders getting filled or missing out completely, my priority is making sure that I'm on the trades that I shouldn't be on and not making a mistake. So here, the low here is 81.5. So the entry is actually the same, but so I don't need to do anything. I don't need to touch anything. But if there was any danger at all, I would do it. I would prep a new order if, say, the entry was up here and it was a substantially different order. That's a really good question. What I don't want is a situation where the market just falls off the plate quickly. I haven't got an order on. I should be in a trade. I'm wishing I was in a trade, and then I'm about to get filled, and not yet.
You're not in yet, Scott?
Not yet. I haven't got a fill. You in?
Yeah, I'm in.
I think I'm going to get a fill. I mean, I think I am. I don't know. The market can do what it can do, right? Really good question, Simon. And I am filled.
Scott, what is your fill? Where did you get the fill?
80.9. I got 1 pip out of slippage, and I've got target of 76.
So you entered at
81. 80.9 was my fill. 81.
81 was your entry.
No. Hang on. No. I haven't got slippage. Sorry. It's 81. I'm no slippage. Sorry, my bad.
Okay. Scott, you if I can ask you, you're still doing the same dollar value in your R percentage, the one you were doing before?
Yeah, I'm just fucking around, man. I'm not trading serious size.
And for you, if I remember correctly, that was 500 per hour.
Yeah, I'm just trading $500. I'm just trading $500 hours now.
Okay, so for this $500 hour on your broker, what is your lot size?
Sorry, my stop
I'm
is
saying for this R value. No, not stop. Your lot size on your broker.
1.1 million. 1.11 million.
Okay.
My broker doesn't works in money. So 1.11.
Okay. It's like for me, if it is like two standard 2.11 or 1.5, so it doesn't work like that for you.
One standard lot is 100,000. This is a 10.1 lot. 11 lots. 11 standard lots.
So you're doing 1.1 million lots.
$1.11 million, which isn't very much.
And one standard is 100,000.
One standard is 100,000.
Okay, so if I was doing this on my brokerage, it would have been 10 standard for me almost. So I would be paying somewhere around, let me see, what is the commission? 60 cross. Okay, I would be paying somewhere around $60 for this trade for this lot size in my commission. Is that okay?
So my commissions are 20 basis points unless I do a certain volume when it goes down. So it's 0.00020 times the position size, which is 1111123 by 0.0002 is $22 in, $22 out. So I'm paying $44 in commission on that size on a $500 row. It's not so bad on a commission really bites on very small R value. It hurts on small R value. The bigger the R value, the less the impact of comms.
I tried to, yeah.
So one thing I want to point out for you guys is anytime that you see a big candle at the end of a run, think about reversal. Even though this seems like a trade you don't want to take, these are always trades you want to take. The highest probability is a very substantial pullback to here-ish. And if you look at where would be a reasonable pullback to, this previous pullback was to here, a pullback to about here would be perfectly reasonable. A pullback to anywhere above here, so anywhere here would not threaten the uptrend. It could still be an uptrend.
Scott, this last Friday, I'm not sure whether you were trading it or not, but this was a really good day actually for the system. So
Yes,
it was somewhere around more than 5 hours. It was more than 5-hour day. So
Wow.
I was actually looking at it. I actually traded it all the way, and I got all the trades.
You got all the trades.
So that was,
Wow.
yeah, I got all the trades. So that was a 5-hour day for me. But apart from that, what I was actually being a bit curious about was that all of those 5 trades, all of those 5 winners were Bollinger confirming evidence. And cherry on top of cake is that none of those trades gave you the space to come back, like move back like 2 pips or 1.5 pip or something, whatever. Like they didn't come back. The volatility was so high that they got triggered and then they go all the way up to hit your target. Like, so that idea, if we were to put some sort of the idea that you were actually talking about in the past days about that Bollinger confirming evidence for having to retrace for a couple of pips and then taking the order from there.
Yeah, I don't think it's a starting idea either. A little bit of testing Yeah, a little bit of testing isn't showing that one to work.
Yeah, okay. But for this particular finance, that definitely wouldn't have worked, man.
Yeah, I mean, look, I'm generally willing to spend an hour of my life testing any sort of thing. So I would test 7 or 8 ideas and throw them away. And I'm constantly testing new shit, right? Like I'm not. Every time I sit down and I grind things out, I learn new stuff about my own systems and yeah, it's never time wasted.
Okay, that's good.
So who reckons
By
this?
the way, I'm keeping an eye on that higher time frame.
Who reckons this trade is going to work or not? Who thinks this looks greasy?
I think it looks greasy. You never know, but
Chris thinks it's greasy. We'll see. I think it looks okay. Sherry thinks it's greasy. Michael thinks it's greasy. We'll see. We'll see, motherfuckers. I think it looks okay.
now it is supposed to work out. Well, everybody thinks it's
Yeah, exactly. And then 5, 4, 3, 2, profit. So what is the objective evidence? The objective evidence is that it's going down, but it's going down in a way that's like not satisfying. We've got a lot of overlapping bars. We've got down, up, down, up, down, down, or down, up, down. So it's going down, but it's going down like a bitch. It's going down choppy. Is that inconsistent with a short target mean reversion trade? It's not really. Still a pretty decent shot. Might not quite get there, but it's not terrible. And what I want you to pay attention to is the way this trade feels, because win, lose, or draw, this is a pretty decent trade, but the way it feels to take this trade is this is a shitty trade to take, right? Like it feels like 7 out of 8 of you have said it's greasy, you don't like it. And it's important to separate what you feel. That I guess the point I'm trying to make is that feeling of it being greasy is really actually a key indicator about what we're doing here. Like it might stop a little bit short of getting to the target, but it's not. It's certainly not the worst trade I've ever taken. Okay, and it's probably brings up another really interesting situation is when you get in trades, the temptation is to ride them like they're cheer them on like they're a sporting team, right? Like it's your football team, and that is very, very harmful for the amount of time that you can safely trade before you start turning into an idiot. So the way I like to think about it is that your attention span is like a full dollar. And if you can use 90 cents out of your dollar's worth of attention just by cheering and winning and losing and come on. And then you've got nothing left for the main game. So you can trade much better. Like I'm watching this trade and kind of hoping it works. But I shouldn't be. Like that's bad. That's objectively bad trading. Objectively good trading is once you're in the trade and it's impossible to get a trade in the opposite direction, just fuck off and have a snack. Take a piss, get a drink of water, stretch out a bit, like do what you need to do. You know, the thing's going to win or not going to win, completely independent of how much attention you pay it. Really cool day of trading today, by the way, guys. Like, interesting situations. Good to teach people a little bit about the rules. Yeah, cool day. And I'm going to take a break for a minute and go to the bathroom. Graham, why did we take this short RTC trade when the 5 and the 10 minute are in long trends? We don't. We still take counter trend trades, even when it's trending on multiple time frames. So, to resolve any questions you have about the rules, the way to do it is always to apply a literal application of the rule. So the rule is, do we have a setup on the 2 minute? We do. Do we have confirming evidence on the 5 minute? Yes, we do. We have a Bollinger Touch for short confirming evidence. Do we have confirming evidence on the 10 minute? Yes, we do. That's the end of it. And is it high and tight? Which it was. It was here. 76 is the target, so which is here.
Sorry, what was the confirming evidence on the 5 and 10? Was it the Bollinger Band touches?
On the 5, it's a Bollinger Band touch, but the easy way to think about which confirming evidence you're looking for, 50% of them are Bollinger Band touches, right? So the first thing you always want to look for is, do we have a Bollinger Band? Do we have an upper Bollinger Band touch for short? Yes, we do. End of story. Done. If we don't have that, then do we have a downtrend with a pullback? Well, we can't, because it's obviously not a fucking downtrend. Are we in decreasing volatility down? No, obviously, because we're not trending down. And what's the other one? Are we walking down the outside of the lower Bollinger? Obviously not. So, but you don't even have to worry about the other ones, because the Bollinger one is like half the time.
And decreasing volatility would deny the trade, right?
No, it would not. If we're in decreasing volatility on the 2, but as a practical matter, anytime you get a big candle like this, it's impossible to be in decreasing vol. You don't even have to check. You can see you're at the highest ATR value in the trend. So a quick glance down, just a last check, and okay, we're roughly at the highest ATR value for the trend. Can't be in DV, don't need to check. So who still thinks this trade looks greasy? Still hasn't hit my target. It's a thing of majestic beauty, Crispy. Just watch that beautiful thing. Come on. Partial fill, come on. Whoa. All right, we have a winner. Oh, it's good to get one in the books. All right, next one. Okay, now, that was kind of a, you can see why we only went for 1R there, 1.1R there, right? Like that was kind of a hard fought way down. What that's telling us is that the market's going down, but it's not really liking going down. It's fighting for every inch. So like a cork pushed below the surface of the water, this shit is going to bob. If we get a lower Bollinger touch here, this is going to paint a very, very nice long center.
Scott, for establishing your ATR trend high, does the Bollinger Band need to be touched as well? I thought it was just printing a higher price for the day.
Say again, please.
For establishing your ATR trend high versus the pivot, it's the price. You don't require a Bollinger Band touch, do you?
No, it's got nothing to do with the Bollinger Band touch. So the first thing you do when you get into a trend, so trending is a 2-stage process. We touch the upper Bollinger, which we haven't here. We touch the upper Bollinger here. Here we go into a trend. So what is the highest ATR value for the trend? At this point, it's here. We're immediately out of decreasing vol because this was the highest ATR value in the trend. Now we've popped out. Now, what if we were in DV, which we're not, what would throw us out is breaking this value or this value. But we weren't in DV at the time.
Could have my first trade with you guys as a winner.
There you go. There you go. Kenneth, when decreasing volatility mode, oh, sorry, my bad. I just accidentally scrolled up to an old question. Okay, we're coming into a Bollinger Touch, not quite, maybe. So keep an eye on, so usually what I do, I leave the mouse over it and just keep an eye on. The Bollinger is 74.4 and the low is 74.6. Now, Bollingers can move around like moving averages until the bar closes. So once the bar closes, that shit is all set in stone. It doesn't move. Until then, for example, if this market was to rally very hard and close up here, this Bollinger would bend up and meet it. We touched the Bollinger is 741 and the low is 741. So we have a Bollinger Touch. So the Bollinger low here, 741, and the price low 741. And what do we need? We need a higher close and a lower close without breaking that 741 low. So far the low is 743. It may tip down and touch the Bollinger again. Mike, I usually do about 2.5 to 4.5 hours a day, but I don't trade every single day right now. I trade on average about, over the last 3 months, 11 hours a week. It's not that much. And on average, it works out about a trade every 45 minutes you're sitting at the screen. That's just what it works out to. An interesting point about that is that it's lumpy. So like a lot of things, it's entirely possible to take 4 or 5 trades in an hour, and it's entirely possible to go 4 or 5 hours without a trade. So yeah, it's not steady as she goes, if you know what I mean. All right, welcome Arnold. Just join the room. So we have a three-stage process for painting a setup. One, touch of the lower Bollinger, two, higher close, which we have. Now we're waiting on a lower close or a hammer candle, and we need a target that's below here. We have confirming evidence. We're trending up on the 5 with a pullback to the moving averages, and we're trending up on the 10 with a pullback to the moving averages. Going for a 2-hour target. All right. So we have a setup here. The entry point is 77.5. The stop loss is 73. So that's 3.5 for 4. Sorry, I was a little bit slack on getting that order placed. It should have already been placed, but I'm being a dick. Size 1.25. Okay, and actually I'm gonna place it on this bar because it's not gonna fill until there. So 75.5 and 73. Okay, order is placed, but I'm gonna prep a new order because this order is gonna be substantially better.
Scott, did you say 3.5 then or 4.5?
3.5, I said. Was I wrong? Hasn't filled, so I'm still good.
It's the 977.5 and 973, 4.5, isn't it?
And 775 and 973, 4.5. Yes, you're correct. My bad. Okay, let me adjust that. I think this new order is going to be the one. So 75.5 and 73 is going to be a 3 for 3.5, or 2.5 for 3.5.
No, it's not.
That's cancel, Scott. Lower.
Broken the Thank you. Okay. Okay. So for the guys watching that, once we break this low, it's cancelled. So the low is 73.4, 73.2. So what I noticed there is that my own trading got really fucking shoddy. I was reading an article on the other browser window and that was really, really like shithouse trading on my part. And been going 2.5 hours. I probably didn't take enough breaks. That was probably not my finest hour there, right? So we need another Bollinger touch to make this setup happen.
A touch is sufficient, doesn't have to exceed it, break it, does it?
A touch is sufficient. That's a very good point too. And my
US 30.
diverse met. Right, and it's worth noting that we cannot go into decreasing volatility down because we're trending up on the 5 and up on the 10.
US 30 indice has an interesting, I think your setup has a signal there.
Let's have a look. That looks like it wants to go.
Just looking at the Dow, the US 30, not the S&P.
The Dow. Yeah, that's a very nice setup. Okay, so we have a 3-stage process. Stage 1, touch of the lower Bollinger. Stage 2, higher close. Stage 3, lower close. So this has still got a minute to go in this bar. The confirming evidence is really nice. This is exactly the sort of proportional pullback that I like. And you can see here that we have a nice strong trending move. It worked off all that overbought momentum with a period of fucking around. Nice strong trending move. It's got roughly the same amount, roughly the same amount of time fucking around. It's a nice proportional, good looking move. Like, this is a good setup. Okay, this could be a setup. If this is a hammer candle or a lower close, the entry would be 77.5 and the stop loss would be 71.5. So that would be 6 for 6.5. That would be 84, and that would be totally okay. So that would be 6. Let me just work out my position size. Where is that? Okay, no setup. And Jan, yes, it is a 2-hour setup if we get one, but it was not a setup. I think this bar is going to be set up, probably. Maybe. Okay, so this is a hammer, this is a setup. So it'll be 7.5. Okay, this is quite difficult trading because the position size is changing a bit. Okay, so 10 seconds to go. I'm placing this order. Okay, so the entry point of 79 minus 71.5, 7.5 for 8, 87. No, that's a bit too far. That is not acceptable. I think this next bar will be acceptable. Yep, 78.5. Seven. Position size right. Okay, so this is 7 pips for 14. And we have 40 seconds to go. Okay, I think this one was just too far as well. 9. No, it's just a bit too far. Sadly, because I want to be in this trade. So everyone's clear about that. That was annoying and quite difficult to do, actually. It's right on the borderline of being high and tight. So at the last minute, it just edged up half a pip and fucked with me. So that's a trade that I would like to be in. I would like to take. Everything about it looks good to me. All I can do is hope that it pulls back enough. It doesn't fit the rules. So, Nick, no, it's not high and tight. It's too high. Just it looked like it was going to be, and then just at the last minute, it just edged up a half a pip, which upsets me. So let's look at it again. Here, the high is 78.8, so that's an entry of 79. Stop loss 71.5. It's 7.5. So the target of 8 pips plus 79 is 87. Here, just too far. Pisser. Maybe it'll pull back. So what we do here is we wait for it to pull back. This could pull back here, paint a fabulous, much better entry, and be much easier to hit the target. We're in that situation where we have to just hope that happens.
If you think this might be quiet for a moment, would you mind looking at that Dow Jones again, please?
Yeah, I want to keep an eye on this. Actually, yeah, no. All right, let's look at the Dow. All right. Yeah, it looks like it wants to break out this this Bollinger Pinch, low volatility and a high volatility regime. That wants to go up. Yeah, I definitely want to be long, not short there.
Show a different price than me. I'm showing it just pierced 30,000.
That's the YM futures. US 30 isn't actually a market. It's like some, it's like a CFD thing. So YM is the real market that it's based on. All right, so now we are a minute and a half. Now this is a setup and a better setup. So this is why we wait. So the entry point is 78.5, 71.5. So that's 7. Let me just work out my position size again. Okay, 714. Okay, same order, good. Okay, this is a much better entry and we have 1 minute to go. This is the most difficult trading we've had to do all day. Okay, 25 seconds to go. 7 pip stop, 14 pip target.
So Scott, that puts your target at 862, doesn't it?
Yes, but we calculate high and tight on the basis of a 1.1R target. And I'll talk about this a little bit once my order is placed. My order is placed. So
that's above that pivot high.
It's allowed to be a little bit above pivot high. So this is 78.5 plus 7.5 is 86. It's allowed to be a little bit above, just not too much above. In the direction of the dominant trend, it's allowed to be just past it. And it is. That's a good trade. We may get a better entry still. So the reason why we calculate high and tight based on 1.1R is is that everywhere else we're calculating it on 1.1R, and even though we're going for a 2R target, it's best to keep all the filters that you have the same. It looks like we're going to get a better entry again here. I probably won't resize that. I'll probably just drag the order down, even though that's a bit like lazy. And we are 40 seconds from new entry. "25 seconds from new entry." You can see the perfect example of why we use high and tight. If you hadn't got in here, you would have experienced some painful butt hurt and possibly regret in the last couple of moments. And okay, moving the order down to 78. Let me check that. No, that should be. What's the order here? 37.5. Okay, yeah. Okay, that's correct. The entry is 77.5. That's 6 for 12. I did not readjust the target, but I probably should have. It made a bit of a difference there. Let's see if we get a fill. Okay, and about to get filled and filled. So target should be 89.5. Can someone else confirm that? Target of 89.5.
Confirmed.
Thank you. Okay, who feels this trade looks greasy? Like snap poll, like instant judgment without thinking about it, without analyzing it. Do you love it or do you hate it? You glad you're in or you wish you're out? In the chat. Okay, love it. Now just like an instant straw poll of how you like instinctively feel about it. Okay, so what I'm seeing a lot of is that it fits the rules, got to take it. Like everyone knows that. Like no one's being a cunt, but no one's loving it, right? No one's like, fuck yeah, we're on. Daniels love the 1R target, 2R not as much. Yeah, kind of with you on that. That's pretty much the way I feel about it. 1R, I'd be highly confident. Now, what I want you to start noticing is that when most people feel that way, it's a better trade than you think it is. You know, no matter how good you get at reading the price, and I think I'm reasonably good, you're never good enough. You're never good enough that your feelings are reliable about this stuff. It's almost like first thought wrong. Nick would feel better if it was touching the 21 on the 10. Yeah, that's pretty sensible logic. So a good trade, you should be able to make a case for it and a case against it. If you can't make a case for it, it's probably a bad trade. But if you can't make a case against it, it's almost certainly a bad trade.
Scott, do you think to yourself whether we're in a range-bound market or a trending market, or you just stick to the rules?
I try not to. Like, it's hard to throw away like a long time of like doing that stuff. I shouldn't, and I try not to. I actually try. Sometimes I try harder than others. When I'm at my best, I don't care about it at all. When I'm being a prick, yeah, I probably care a bit too much. I don't bend the rules, but what causes us stress? So what causes us stress is struggling against the nature of reality. You know, if you're a Trump supporter and you're frantically believing that he won the election right now, which actually didn't happen, like, you're struggling against the nature of reality, and it inherently causes stress. So it helps not to think. It's just like easier not to think. Like, a certain percentage of great trades lose and a certain percentage of shitty trades win. It's just the way it is. So as a general proposition, things that cause us stress while we're trading are unhelpful, and things that let us just do what we do are helpful. And mechanical things that help us do what we do. So let's look at this situation we're in right now. The stop loss is pretty close. The stop loss is here. What can we do? Check that your stop loss is in the right place for a start. That's something you can do. You know, maybe your stop loss is up or down a 0.1 of a pip from where it should be, and that's a prick of a thing. If you accidentally get stopped out when you shouldn't be, that sucks. Once you do that, there's nothing else you can do. So it's actually best, whatever internet browsing bullshit you have going on, just do that for a while, watch some YouTube, set an alarm or turn the sound up on your thing so you hear the thing. It's going to work or not work, no matter how much you give a fuck. So you see what I mean about this trade's still going, right? Like it's survived a scare. A trade is better after it survives a scare, almost by definition. If you watch this too closely, like I'm bullshitting away in the chat in the other window, but if you watch it too closely, you experience the lows and the highs and, oh, fuck, it's still good. Oh, maybe it works. And, oh, shit. Oh, fuck. If you experience all that, it's just hard. It's just harder than it needs to be. You don't need to do that.
Quick question, Scott.
Sure.
If you had a trade, an RTV trade, perfect setup, but it was denied because of decreasing volatility, but then in subsequent bars, you were kicked out of decreasing volatility, does that trade then become viable?
Okay, so you don't automatically jump in that trade does become viable. So if the setup appears and it's one you would take again. So the way to think about it is your closing evidence has to be your closing evidence has to be present on the close of the bar of the setup. So if say here was the setup that we entered, our closing evidence has to be entered. If there is no setup, and then later on, for example, we got this brand new setup, which we actually did here, and all of a sudden we're out of DV, and let's say we were in DV and then we popped out of DV here, this setup would be totally fine, and you check for confirming evidence at the close of the bar that makes the setup. Really good question.
Okay, thanks.
Okay, so who still thinks this trade looks good? Chris is right, 50-50. It's a coin flip. So we look at this previous trend and you think this trend still has influence, but the further this goes on, the less influence the previous trend has and the more influence the trading range aspect of this has. So I would say that we are past the point where the trend makes too much difference, and the thing that makes the difference is this strong support around this level, and that's probably the only thing keeping us in this trade right now. I would say 2R target is not looking good, and the odds are, if we're lucky, we get 1R and then stopped out for break even. Double top. No, I'm not even thinking that far, man. It seems like maybe between here and here we bounce around a bit, but I really wouldn't know. What is the point of the 1R target? We'll have to keep an eye on. The 1R target was 83.5, which is here. So we moved the stop to break even here. Oh, sorry, 1.1, Chris. My bad. I was wrong about that last week. 6.5. So that is 84, sorry. So here, thank you, Chris. And Chris points out rather cleverly that we're out of trend on the 5, which I did not notice. Okay, Ben has a good question, not a silly question. What is a trend on the 5 of the 10? So let's look at it in detail. Let's load up the 10. Yeah, this is the 10. A trend is a 2-stage process. Stage 1, touch of the upper Bollinger. Stage 2 is a single candle that has a higher high and a higher close in the single candle than we've had so far. So it has to be a higher high than the highest than this candle and this candle, and a higher close than this candle and this candle. So here we have a higher high and a higher close. We start trending. 3 things stop us from trending. Thing number 1, touch to the lower Bollinger. Thing number 2, 20 bars without making a new high. And thing number 3, which we don't have, a close below both moving averages, then a close above both moving averages, then a close below both moving averages. So we need to check here, what are the moving averages? This moving average is 736 and the close is 735. So we have a close above, close below, close above, and close below. And so we stop trending at the close of this bar. It starts at 445, ends at 450. Not a silly question at all. Good question. Okay, we have a touch of the upper Bollinger, lower close, probably going to get a higher close, but we have no confirming evidence, so we don't have to worry about it.
would you feel like ข้าวผัดปูที่ซอยเอ็ดไหม
ข้าวผัดปูอร่อย
เอาไหม
เอา
โอเคเดี๋ยวไอจะ go by ไปซื้อนะแล้วเสร็จแล้วไปซื้อข้าวผัดปูกันเอามันไม่ได้
โ Question from Francis: how long did it take you to learn Thai? I speak Thai like a fucking retard, man. I've got about 2,000 words of Thai, and then you need about 3,000 to have like even a basic level conversation. So I'm like taxi driver in restaurant Thai. No, it doesn't take long. It doesn't take long when my wife speaks Thai, obviously, because she is Thai, and everyone in my house speaks Thai, and my cleaner speaks Thai, and my daughter speaks Thai, and my mother speaks Thai, and everyone speaks Thai, and yeah. If you didn't speak Thai, you pick it up pretty quick. There's 5 tones in Thai. There's the regular tone is like the way they teach it is like ma. The word for come is ma, and the word for dog, for example, is rising tone ma, and the word for horse is ma, high tone, and there's low tone ma. So everything is tonal, but as Westerners, we think English isn't a tonal language, but English is a tonal language. We put the emotional content of our words in. So if I can say hey or hey, it's not like that in Thai. That like the tones have the meaning, not the emotional content. Yeah, and the tones are fucked. Yeah, they're hard to deal with. It's a really cool place to visit, Francis. It's a really cool place. It's yeah, check it out. I'll turn the camera on. Let's have a look over here. Bangkok in all its glory. It's a big city.
You must eat like a king, Scott. All that Thai food and goodies.
The food's good here. The food's really good. The food is undeniably the best part of Thailand. We've got trading range behavior here, guys. Like you can see in these couple of bars, it vacuumed very hard up to here, and it's edging down here. So the longer this trading range goes on, the more likely it is to resolve to the downside. I'm not feeling particularly good about this trade anymore. This is probably a loser. And if we look at the volatility situation, we've got the lowest volatility pretty much since the highs. It's got to reverse pretty soon or it's fucked.
Hey Scott, it's Mike here.
Hey, Mike.
When you feel like you're onto a loser, like with this trade here, do you ever think about pulling it early and just killing the trade, or would you rather see it stop out and let it run its course?
It's a question of sanity, man. If you do it now, it's okay if you do it and you get it right. But what if you do it and make a cunt of yourself? Like
Absolutely, it can go either way from here.
So if I have a losing trade, it's not really my fault. Like the beauty of system trading is I don't feel like a cunt for having a losing trade here, right? But let's say I jump out of this trade now and the trade goes on and makes 2R. Then I'm not just feeling like a cunt, then I really am a cunt. Like you've just fucked yourself. it's undeniable. It's totally 100% my fault. No way I can argue that, oh, but it's okay, you win some, you lose some. Like, that's all bullshit. So having made all the mistakes, I stopped doing all that early beginner mistake shit like probably like 7 or 8 years ago now. So
You prefer to just go with the limits and the stops, and you win some, you lose some, and you just take it on the chin and see how it goes.
well, you know, when I started trading, I was really trying to make a lot of money, like right now, like right now. And now what I'm trying to do is, now I've been in the game a while, I'm trying to still be in the game in 10 years. Like and part of that is being older. Part of that is having the market punch me in the face a bunch of times. It's just easier, right? Like, and also, to be honest, a big part of it is the fact that I'm doing it like in front of you guys. My results are public. Like, if I start behaving like a dickhead, how long until one of you starts commenting on my Facebook threads or replying to my emails saying, hey, the rules say you did this, but you did that. Why? Like, those are. Am I stopped out here? I'm stopped out. Yeah, those are just questions that I.
Fair enough. You've got to stick to the rules. I think, yeah, you make the rules, you stick to them, and you win some trades, you lose some trades. It's easy
for me being in a public position where if I bend the rules, like I really do, like if I bend the rules and I make money, I don't look good. It doesn't make me look good.
Yeah, it's bad discipline.
Makes me look like a dick.
Okay. The other thing I had a question for you on this was, so you've stuck with the Euro USD chart for today's trading. Is that normally how you roll? Do you normally?
This is how I roll, but it's not. This is how I roll, but it's not my preference. I like and I have much more history with and more affinity with futures markets. I'm better at it. And when I started trading, I traded ES, and when I started this system, I traded ES, and Daniel traded micro ES, and the vast majority of retail traders don't like futures for some reason or another, and so I switched, and I still prefer futures, to be honest.
Okay, so you normally have maybe 4 or 5 markets.
Oh no, I'm not. I'm doing one
chart per day.
I'm doing one market at a time. I've got other systems. My longer term systems don't. I follow a lot of markets, but they don't take any time. They're like once a week systems, right?
Right, I get you. And what appealed to you with the Euro USD, was it because you saw that the volatility dropped so much that it looked like a good?
No, it's the liquidity. Liquidity is a very, very big deal for intraday systems, and there's nothing more liquid than Euro US dollar. Like, I mean, there's a bunch of futures markets which are super liquid, but not many FX markets that are that liquid. Cable is okay. The yen is okay. Most of them are okay. Just nothing's as good as the euro. The euro doesn't necessarily move the nicest or anything like that. Like the JPY crosses trend better probably. The cable is a pretty interesting market. The GBP. Yeah, just I don't know. It was just honestly, it was just pick one and stick with it kind of deal.
No, fair enough. I'm just curious how you pick the markets and how many you try and manage per day. Whether it's whether you can do more than one, or if it's just focus on one at a time and stick to it.
This is a really interesting question. I've got friends and students who trade more than one, and they say it's easier to stay focused with two. I can get distracted and I can fall down rabbit holes of watching YouTube shit. Are we going to get a setup here? I think we are. 713, locals. Yeah, there's going to be a setup. Okay, so let's take this. The high is 74 and 71. It's 3 for 3.5. Okay, I know that position sizing. It's the top of my head.
Broke high, Scott.
Okay. Thank you. Do we have confirming evidence? We do on the 5, even though we're not trending, we've got a lower Bollinger touch. We're still trending on the 10. Okay, so we're good. Yeah, I think this is probably going to paint a setup for us.
Oh, if it pulls back enough, it will be 5 for 5.5, or 10 technically.
And the highest, this would be the max target, so that
81.5, so it's under that.
Yeah.
Didn't quite.
Didn't quite. Ben, Cameron, why is the 10 trending? The 10 started trending at the close of this bar here, and it continues until it stops trending. 3 things stop it trending. Thing 1, touch of the lower Bollinger, which we haven't had. Thing 2, 20 bars without making a new high. We're at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 bars. So we're not in danger there. Thing 3, a close below both moving averages. Do we have it here? We do not. The EMA is 720 and the close is 723. So we don't have a close below, close above, close below situation either. Okay, this in 1 minute and 9 seconds looks like an outstanding setup. Okay, so that would be 74 and 71 is 3 for 3.5. Oh, and it's Bollinger trending, so sorry, so 3 for 6. My bad. Okay. I think I might have got the position, so it's a little bit wrong there, but it's too late to change. Okay, placing order now. I've sized it as 3 for 3.5, but I think it was 74 and 71. No, I've got it right. Okay. Okay, so before you place an order, you have to check, did we get tossed into decreasing vol mode? So this close is 723, this close is 726. So we can't have been tossed into decreasing vol mode. We might here, or we might break the low, cancelling the setup first. So if this bar, if it doesn't break the low, but closes here, it's almost certainly going to toss us into decreasing vola, and we wouldn't take this long setup if that happens. So the bottom line is this market has either got to reverse hard now, or it's not going to be a setup at all. And looks like it's broken the lows to me. Let me check. 1.3 and 71.2. So on my interactive brokers data, that broke the low. Let's check it here. 71.09 and 71.13. That is no setup. All right, guys, I'm going to call it a day for that. That's, what have we done? 3.5 hours, decent enough day. Thank you very much for your time today. I might take a few more minutes of questions. If anyone's got questions first, we can do that. Anything you want, happy to answer.
Just that ATR where you were just pointing out that Bollinger touch there, and you were trying to establish the new low.
Okay. No, actually, I was wrong about that. I was wrong. Disregard. So we weren't trending. So because we weren't trending, we can't have been in decreasing dollars. So I was actually wrong about that. Sorry, my bad. And from Robert to everyone, why do you use UTC-5 on your chart? It's New York time. I'm in Bangkok, which is really nothing for world time. Like, it's easy for me to think in New York time. And I travel between Bangkok and Australia when travel was an actual thing. And it's just easier to think in New York time for me. Right, guys. Nice to see everyone. Nice to see you after a while, Francis.
Scott, have a good night.
From Byron, are you able to recommend a good backtesting tool? I just walk through the charts with spreadsheets. That's the best way for me. Are you a programmer, Byron? If you're a programmer, backtesting is comparatively easy with both AmiBroker and Python. It would probably be my top two choices. And Francis says Soft4FX is great. If you can program, AmiBroker is pretty quick. I've seen people backtest up this stuff pretty quick in that. I like Python. It's a really good platform for it's really good for backtesting. It's not so good for execution, but good for backtesting. C# is a bit of a slow way to do things, in my opinion, but I'm a terrible programmer, so I'm not the guy to ask.
Scott, can I just ask a quick question on DV?
Sure.
So we're in DV now, but at what level? When do we pop out?
Okay, so we're not in DV because we were
back out.
Yeah, we're back out.
Went in, but straight back out.
Yeah. We've been out a long time. What throws us back in is the lowest close in the trend on a single bar downtick in ATR. So trend to be in a downtrend, we need a two-step process. Step one is this, touch of the Bollinger. Step two, a single bar with a lower low and a lower close. So the low here is 713. The low here is 706. So we have a lower low and a lower close. So we start trending at this bar on a downtick in ATR. So we get, but whenever we immediately go into ATR, there's a very strong probability that we immediately pop straight back out at the start of a trend. Because, and you can see why this is the highest ATR value in the trend. So immediately one bar of uptick and we're out. Actually, I might hang around and take this trade because I think this is going to be a good one. I'm going to take the trade if it sets up and then fuck off. What I like about this trade is this candle and this candle up. This is quite a big round trip. Like if we look at the size of our candles here, these are pretty small, but that's a big move down, big move up. That seems to be volatility kicking in after a period of exceptional low volatility compared to most of the day. I think this is a nice trade to take. So I'm just going to extend out my trading window a little bit and one more time. Okay. Japai Swampu so bad?
ใช่
Okay. Pa. Okay. Okay, I'm going to take my wife to get dinner. Okay, I'm going to cancel that idea. This is a nice trade. If you guys are still trading, I recommend you take this one. So, yeah, I'm going to take my wife. My wife I just realized she was hinting before that she wanted me to, she's Thai, so she's too polite to say, but she was like hinting that she wants me to take her to pick up the food that she wants for dinner. But by asking me for dinner, she was like hinting that I should take her to go get that food because otherwise she's going to walk, and I was being selfish. So really nice day of trading. And I'll answer one more question. Arnold, what is the average amount of trades that take place during one trading day? About 4.5. And yeah, Thai passive aggression. It's a weird thing. All right, guys. Great day's trading, and see you all soon.
Cheers,
Cheers,
Scott.
Scott.
Thanks a lot.
Cheers, everyone. Thank you.
Bye, guys.